Hey everyone, it's Evan here from the Trade Risk on Friday, November 3rd, here with a weekend market recap video. We're going to cover all of the major markets, the current market environment, and then finish off looking at some sector analysis. So hopefully you had a good week trading. It's already Friday. It's actually snowing out here in Seattle right now, well, snowing is sort of an exaggeration. There's flurries outside right now, but still fairly remarkable in Seattle to be seeing some snow or flurries. Even early in the season like this, it was dry throughout October and September, the fall time. So maybe we're starting to pay for that now. But hopefully you're not dealing with any type of cold weather. If not, we got charts, we got plenty of them, and that's what we're going to jump into right now. So the S&P 500 here, we're going to start with the SPY ETF, and you can see we finished higher, 29 basis points here on Friday. That's 74 cents in the SPY ETF. And that basically accounted for all of the gains from the week. If we go to the weekly chart, this is the weekly chart here, you can see we closed at new all-time closing highs for the week, basically continuing in this trend. Same exact sort of scenario that we've been in for the past several months now. Most of this year is this grind higher. You can see volume was a little bit on the light side this week, but still new closing week highs right at the highs here to finish on Friday. So if we go back to the daily chart and look a little bit closer at what's going on here, we can see our last video update on Wednesday when we did our midweek video, we talked about this this open higher here at new highs and this failure to sort of hold on to those highs, and we closed near the lows here in the S&P 500 on Wednesday. That didn't really materialize to much. If you were really tactical and very active trader, we did get some follow through yesterday on Thursday. We came all the way down to about 256 and a quarter, 256.20, and we did make about $1 or so continuation lower, but that was it. I mean, it was half a day that it lasted for. We got the reversal. We closed near the highs on Thursday, and then we saw the follow through here on Friday to new closing highs. So basically, when we look at this scenario here for the SPY, it's basically the same thing that we've been talking about. The trend continues, the grind higher continues. Volume was a little bit light this week. And the one thing that is a bit notable and something we talked about, and it did surface about a month or so ago, is some breadth divergence here. So basically what we're looking at and what we're seeing now is if you look at a advanced decline line, look at the cumulative advanced decline line, you'll notice that the AD line is actually kind of consolidating, pulling back a little bit, and it's not making new highs with the S&P 500 like today, for example. So you got a little bit of divergence there. You could also look at the number of stocks making new 52-week highs and lows, and notice the number of 52-week lows is starting to creep up just a little bit. Again, not in any type of severe territory in either of these cases. This is real sort of short-term, actionable, or very close short-term levels that we're analyzing on both of these metrics, but it's something to at least pay attention to. If it continues to diverge, if we see another week or two where we see market internals start to or continue to diverge, that would start to materialize to a more meaningful divergence, in my opinion. Right now, it is sort of in the early stages, and we have to keep in mind that the dominant trend, when we zoom out, is still remarkably strong. So even if we do get a 1 or 2% pullback here, that's been about all we've seen all year before dip buyers kind of step back in and bring this market higher. But something to pay attention to at least. Take a look at those two indicators there, the AD line and number of stocks hitting 52-week highs and lows. And that's basically it for the S&P 500. Not much new to say. It was a busy week. We had lots of earnings out. We had the Fed out, FOMC minutes on Wednesday, and the market took all of that in stride, right? There was all the news and catalysts, companies reporting, giving guidance, and basically we continued higher. It was not enough to sort of derail the market or turn us into any type of tailspin here. So it continues to sort of grind higher. Do note the divergence there in breadth. I think that's at least something to pay attention to. And if we go to the IWM, I think again you get a little more, and maybe this is where a lot of that breadth divergence might be coming from, are the small cap stocks, which actually finished negative on the week. 80 basis points, nothing tremendous, fairly healthy here. In fact, remarkably healthy here when looking at the weekly chart. This is now the fifth week of pulling back, sort of consolidating and just basically trading in a very, very tight range. If we go to the daily chart, here's what the IWM looks like. I mean, it could turn into a perfect looking continuation pattern, just consolidation mostly through time if we can get that break above, say, 150. We tried to on Wednesday. See how we did gap up here, and that was just the highs of the session. We sold off all session. We engulfed Tuesday's day, and then you can see we're just kind of hanging out here on the lows. So something to pay attention to next week. Volume did pick up a bit here in the small caps this week, and I think going forward, we still want to just pay attention to this trend line that extends from the highs. This 150 area would be basically the momentum sort of line in the sand where we would expect that perhaps a second leg higher is coming if we can start to get through these recent highs. On the flip side, if we start to lose these lows right down here, and the ranges are really tight, 147.50, you can see we tested it basically 3 times in here over the past 2 weeks, and it's held. If we started to fall through below there, maybe we get some type of continued shakeout, retracement, larger pullback back towards some of the levels that we saw earlier this year in the Russell 2000. So something to certainly pay attention to there. And the NASDAQ 100 is now into squeeze mode, just really picking up steam to the upside. We had Apple report earnings yesterday. They were favorable. The reaction was favorable. That helped fuel the market higher here on Friday. You can see we closed right here at new highs for the NASDAQ 100, and you can see these fast moving averages here really just extending themselves even further away from each other, and prices zooming away from them as well. So you got that nice momentum that's still very strong and actually accelerating here on Friday. So you know, a lot to like. I mean, it's good to see that the Qs here are starting to really pick up momentum with some more authority. Not the strongest volume, but we are heading higher. But do note that there are, again, some of those divergences, and I think that speaks to what we saw. We saw the small caps lagging on the week a little bit, and we saw the big names like Apple, the Amazons, the Googles that are really holding up and continuing their charge higher. Most of them all had great earnings, and they are continuing in their catalyst there, but they're doing the heavy lifting while you get the small cap sort of consolidating. So we're going to keep an eye on that relationship heading into next week. Could offer some clues, going forward, basically into the midpoint of November. So that's the market environment. Let's jump into some other major markets. We'll go to TLT next, which has continued its bounce higher here. If we look at the weekly chart, it's up 2% this week, so a lot to like. But if we look at this weekly chart, it's still kind of a mess. It looks like a headache. You get the very flat 8 and 20 period moving average. Price is just getting back above it. And if we go to the daily chart, you can see we're rallying now back into a pretty important inflection point. You can see this 126 area. This was resistance here in June. We failed in July here, August again, gapped through it back here in September. We failed here in October. So we're coming back to 126. This has been a spot where the market clearly cares about. There's been some inflections in here over the past 5 or so months. So let's pay attention to see how it reacts to that heading into next week. Maybe after the run, we have some type of shortable opportunity for you very tactical traders. But again, from a longer term perspective, this still looks like a pretty messy chart here, but it's something to pay attention to. 126 to 122.5 right down here. Those are the levels that I would be paying attention to. If we look at oil, oil had a great week. If we can pull it up here, 1.7% rally here just on Friday and 3% on the week. So we're really kind of stretching higher here. Bulls very much in control. The volume is pretty light here on that weekly chart, and even on the daily chart, you can see it hasn't been rallying on significant volume, but it's heading in the right direction, extending away from the 8 period and 20 period. So momentum is building. The trend is up. So bulls are getting rewarded there in oil. Natural gas, we are seeing a bit of a reversal here towards the end of the week. We ended up finishing slightly positive, which is pretty impressive given the fact we were down 3-4% here on the lows. So you can see we did get back above the $6, but we are still below this 620, 625 level. This is basically this brief double bottom here, or I guess it technically can't be called a double bottom if we didn't get that rally off of it. But the prior two sort of inflection points right down here, right around 620 in October, and then again in August, we did see us break through that just a week ago, and now we're coming back up and perhaps back testing it right now. So it'll be an interesting area. If we flew through this to the upside next week, that would be impressive. That might signal that we caught a lot of people off guard and washed out enough week longs in here, or maybe capitulated enough. Didn't quite see tremendous volume, so I'm not sure. This doesn't look entirely actionable here. I think sellers are still in control, but let's pay attention to that 6.25 level heading into next week. If we go to the metals next, gold, you can see starting to slip a bit here on Friday. And if we go to the weekly chart, you can see down just a bit on the week. You can see tried to rally a bit last week, tried to rally this week, couldn't quite get it going. And we closed near the lows of the week. This 120 level, this was the lows from October, the beginning of October. They're still holding, but it looks a bit vulnerable here. So I think we got to be careful in GLD. We drew this as a sort of possible second leg lower here if we started to break down below 120. Let's pay attention to that, but until we break and get some follow through below these lows here around 120, you got to be a little bit patient to see if that actually plays itself out. And silver ended up giving up some gains here on Friday as well. We talked about the fact that it did get this nice sort of rally here on Wednesday, really outperforming, kind of pulling away from GLD, but it gave most of those gains back today on Friday. And you can see on the week closing mostly just flat here and kind of a failed attempt at higher prices. So something to pay attention to. Light volume on the pullback. I still like silver a little bit better here, but they're both still from a longer term basis don't have a strong enough trend to really latch on to. So for me, I'm just a spectator in both those metals, not really interested in participating really either way. And I think that's everything for some of the majors that we wanted to cover. If we go to sectors next, we had XLK, which just continues to accelerate here. Good volume, pushing higher, really just continuing this strength here in technology. It continues to work. You can look at semiconductors as well. Good volume coming in here on Thursday and Friday of 1.7% here, just Friday alone. So this trend very now getting frothy to the upside, but it's not a short signal in itself. It just says that we're have covered a tremendous amount of ground, and you want to be trailing up those stops and managing that risk appropriately if you're positioned in technology or semis. XLE, which we did talk about here as it started to pivot and pull back, is now back to these highs, very quick and short order here, back to the October, September highs here. So if we go to the weekly chart, you can see spent 4 or so weeks consolidating and pulling back, mostly sideways. 2% up week this week, right back to these recent highs. Could start to make this second leg higher here, so I'd pay attention to it. Something I'll be watching next week for a potential trade opportunity. If we can clear through $69 or so to the upside next week, that looks like a pretty good trend continuation momentum play in the energy space. And again, you can look at those individual components as well. Next, we had XLU, which had a pretty good week as well, up 29 basis points, so not as extraordinary from the from a percentage basis on a return basis alone, but you can see back to these recent highs, holding up fairly resilient here despite TLT, or I guess in favor of TLT, rallying here. You got utilities also kind of continuing higher here, but running right into where we failed and kind of rolled over a bit, this 55.30 level. So pay attention to that, and if it starts to break maybe this trend line here, maybe you play some type of mean reversion trade as it gets back up to the top end of this range right in here, or you could use these highs here. I know some people like to go right to the highs here. I see some more supply right in this 55.25 level, so something to pay attention to as it starts to tighten up there in the XLU. IYT kind of continuing to stay weak. We talked about this sort of consolidation here, but you can see it's actually kind of persisting weak. Had some good volume coming in here on Friday, but below the 8 and 20 period moving average, which is now starting to curl lower. Got to be careful here. Weekly chart looks a lot better. I mean, if you just take that bigger picture view, you understand that we are sort of just pulling back after a multi-week push higher. So maybe this is a little more favorable if you expand out that time horizon. In the short term, though, I think you're going to be just a little bit cautious. this. If we start to reclaim above 177 or so, shoot back above some of these prior highs and some of these moving averages, then I think we have some type of support to work with. So pay attention to that into next week. That could be a possible trade entry for you. And one of my favorites for next week is XLV, which did get that demonstrated sort of reversal today. Didn't quite have an outside reversal day, but it did open near the lows and had a strong rally right above yesterday's highs, really above Wednesday's highs. Most of this week's action closing back at the top end of it, and it's coming at a pretty important area. You can see this was the pullback from September, right in here around $81. So we basically came back down, maybe carving out a new range here, but certainly could be the possible sort of double bottom and could ignite a rally, at least back up to maybe the midpoint or 82, 83 level in the XLV. So pay attention to that, as most of those stocks have gotten sold off over the past week or two. So that's it. I think that's all I had for this week's video. So hopefully you guys did well out there trading. Hopefully this video helped. Thanks so much for watching. Do subscribe to our channel if you do like these videos. Twice a week, Fridays and Wednesdays are the recaps, and then some trade ideas in between. You can click that subscribe button in the bottom right-hand corner. So thanks again for watching. Hope to talk to you guys again soon.